Coinbase has custody of 8 of the 11 Bitcoin ETFs. There is, a lot of the issues with the centralization of these ETFs.
There's a lot of folks who ironically are like, what if they don't have the coins, right? Price suppression folks. What if they don't have the coins? To quote Treasury Secretary Scott Bessent, corrections are healthy and normal. Get used to them and start to enjoy them. Range, let's just say 70K for round numbers. That's probably about as far down as we go. On the upside, if we got to 120 and then 150, we're in the topping cloud. I would be surprised if we...
Bing bong. I am back with another edition of the State of Bitcoin podcast, where I've got the man, the myth, the legend, Checkmate in the house, an on-chain analyst. But Checkmate, I heard you in a recent podcast interview say that a lot of people have gotten fooled with MicroStrategy or by MicroStrategy because we're chopping sideways right now, man. So dive into what you think the market's looking like here for Bitcoin. And yeah, tell us a little bit about that comment where you think maybe people got a little bamboozled by MicroStrategy.
G'day, mate. Thanks for having me on. Yeah, look, and I think it's always important to kind of preface these things, right? I'm of the view that markets move towards the pain. They look and for whatever reason, they seek out and they find maximum pain. And I think something that I learned a long time ago, and I use it as a real benchmark or a reference point, people always make the wrong decisions at the wrong time in markets. Something about our brain chemistry and our hardware, the way we respond to fear and greed, you have to actively choose not to be an idiot in markets. And it doesn't matter how long you've been in markets, you must actively choose to not be an idiot because it's your brain wants you to lose money. It's just something about markets. You want to buy when it feels good. And the problem is when it feels the best is usually the worst time to buy. And every single time I've bought, like when you buy a bear market floor, you don't know at the time, it's hellish. It's red. It's been red for like 2 years. You're like, I feel horrible doing this. If you're like, have this like gut wrenching, churning feeling in your stomach when you buy or when you sell, that usually is a much better decision than when it feels fantastic because you're jumping in front of the herd. So when it comes to MicroStrategy, I'm a keen observer. I think it's a fascinating stock. I think it's a fascinating company. What I'm looking at is just how people are behaving within it. And I ran a study that basically goes about 30%, 40% of people bought at like $400 plus. And I made that comment when the price was $250. So I think a lot of people bought when it felt really, really good. And worse than that, I think they bought call options when it felt really, really good. And those call options could have had a strike of $1,000 and expired 2 days ago. That's a big fat zero. So, it's just one of those classic examples of people following the trend. MicroStrategy could absolutely go to, who knows where it's going to go. It's just not going to go there tomorrow. It's probably not going to go there on your timeline. And therefore, you got to go through some pretty gut-wrenching drawdowns.
So then what does that mean for the Bitcoin market? Because it seems like MicroStrategy is always somewhat of a leveraged play. And, I want to dive into the kind of the correlation between the two and then kind of the correlation with your, the short-term events that we have going on here, because we do have a lot going on in the Bitcoin space. But dive into a little bit of the correlation between MicroStrategy and, the dollar exchange rate between of Bitcoin.
Yeah, totally. It's a fascinating concept, and I actually need to do a bit more work, really looking at that like direct, like price to price understanding. What I have done is when you plot realized volatility, if you take the realized vol of MSTR and you divide it by the realized vol of Bitcoin, what you actually get is basically what is the excess volatility? And it's really interesting because it's like, before the Bitcoin standard, they were just bumbling along at nothing, right? That's what Michael Saylor talks about. The company was dead. When he moves to the Bitcoin standard, suddenly that excess vol starts climbing. And now that I think in many ways he's starting to find his groove. The company, by and large, now knows we've got this convertible debt, we've got this ATM, we've now got these new preferred shares. They're getting into their treasury management groove now. Now we're really seeing, typical of 2x vol. Now, I'm of the view that MicroStrategy's business model is to sell and pack. So they take excess volatility. They've got the Bitcoin reactor, as you would call it. The stock is more volatile on top of that, about 2 times more volatile. They package up that volatility and say, hey, Mr. Bond Trader, you want to buy this bond that's got a 10% coupon, but low vol? Here it is. Oh, you want full scale volatility? Go and buy MSTR. You want a convertible debt offering with this, like he's kind of structuring out different yield and return and volatility characteristics and saying, Mr. Bond Trader, you can have this one. Mr. Equity Trader, you can have this one. Mr. Retail Investor, this is for you. So he's basically creating different kinds of exposure per instrument. Now, I'm of the view that it does, the best way to think about it for the layman, it is just going to be levered Bitcoin. And that means it's going to go down more when Bitcoin goes down. It's going to go up more when Bitcoin goes up. But it's also not going to be perfect, because I would say there'll be periods in time when MSTR leads and lags. It's going to follow the Bitcoin price, probably on the downside, I think. So Bitcoin will fall over first and MSTR will follow with a bit more gusto. And I think MSTR probably leads, because if people want to buy Bitcoin and get exposure, and the smart money is going, I think Bitcoin's starting to bottom, why wouldn't you buy the levered version? So in a way, I think that euphoria on the upside means that MSTR will probably, and we've got to confirm this, but it will probably go second. Bitcoin goes first. On the downside, I would say that MSTR probably bottoms first and then starts to reverse.
Okay, that's interesting. Well, you've talked a little bit about, Bitcoin and kind of how we're floating around here. You got into a nice little argument on Twitter that I loved.
Which
and I
one?
want you to dive into it about Bitcoin. Is the price being suppressed? Checkmate.
Oh, shit, this one. Yeah, no. Price suppression. So here's my favorite thing about price suppression. The narrative of price suppression. So first things first, price suppression and manipulation happens, first and foremost. But it only comes out as a dominant narrative when the price is going sideways. It doesn't come out when it's going up. When we're trading higher, no one's talking about price suppression. When it trades lower, very rarely are people talking about price suppression. Only when people are bored and looking for something to do and the market's going sideways and they're getting itchy fingers and they just want the market to go somewhere, that's when people start blaming price suppression. So on these small time frames, daily, hourly, this kind of stuff, yes, what you call price suppression or manipulation, however you want to call it, of course it happens, because some people have serious size. I want to put $1 billion position on. I need $1 billion worth of you people to be wrong. So that means sometimes you got to move markets around to get the result that you want. But I would take a big step back and say that is what markets are. People with various size clips all trying to get in and out of their trade without blowing themselves up. They don't care about anyone else's position except their own. That is what markets are. They're a system of buyers and sellers. And this is the other thing. People often go looking for the boogeyman who's actually selling. It's like, when was the last time you surveyed the dude that you bought sats from? I don't know who I bought them from. I just bought them, right? No one actually cares who is selling, because one sold Bitcoin is one sold Bitcoin, just like one bought Bitcoin is one bought Bitcoin. It's the same thing. So I think the price suppression thing is an easy boogeyman to blame. If I was to take a real step back and say, why are people talking about it? It's because they're bored. It's because they don't have a good thesis for why. And when I really take a step back and I look at the amount of sell side, and this is what I think a lot of people don't like to talk about, but it's real. And as an analyst, I think you just have to look at the real world. If you bury your head in the sand, it's not advisable. We have seen tremendous amounts of sell side from existing holders. $85 billion a month when we first hit 100K, $85 billion a month in net sell side, 40,000 Bitcoin per day. If you look at those kind of volumes, people are like, look, the ETFs are taking in 10,000 Bitcoin. It's like, yes. And long-term holders sold 40,000 Bitcoin. So it's going to take 4 of those big behemoth ETF days just to soak up that one day of sell side. So you kind of got to look at this and go, do you need a price suppression narrative to explain why we didn't go higher? Or can you just look at the tens of billions of dollars being sold every single day and be like, that's probably got something to do with it, right? So that's my core thesis. You don't need a price suppression narrative to explain why we didn't go higher.
Self-custody can be a daunting task. That's why I've partnered with Bitbox. They have the best hardware wallet. They make it the easiest to put Bitcoin in self-custody. So go to bitbox.swiss/greencandle today and use promo code greencandle, and you can get 5% off your entire order. They make it so easy, all in one. You could get the hardware wallet, you could get their punch plates, you could do it all right there on that website to make the self-custody experience the easiest it can be. So visit bitbox.swiss/greencandle. Use promo code greencandle, get 5% off your entire order, and get your Bitcoin off an exchange into self-custody today. All right, enough for me. Let's get back to the show. Well, then I want you to dive in all the bullish news that we're hearing. Why aren't we seeing the price run up? I mean, we have potentially Trump announcing tomorrow, as we're recording this, of some new crypto policy, right? We've had the strategic reserve, Trump coming in office, and it's been down basically since he got in. So, what explain a little bit of these short-term movements.
Yeah, so headlines, in my experience, almost never change the trend. So what is the current trend? In my opinion, the current trend is a monthly uptrend. We've been going in a monthly uptrend since FTX. Yes, prices pull back from the highs, but this is why we have corrections. And to quote Treasury Secretary Scott Bessent, corrections are healthy and normal. Get used to them and start to enjoy them. That's the way that I think about these things. People are so sensitive over what is, quite frankly, kind of looks like a normal correction. Now, yes, this correction could go longer. It could be a bear market, but bear markets are also healthy because it's called creative destruction. Welcome to capitalism. It's good for everything. So when we look at it from that perspective, we saw all of that sell side. When you've got this news coming in, I would say when you actually, when you're really honest with yourself and you say, what did Trump promise? He promised that there would be a more pro-Bitcoin, pro-crypto environment. Check the box. They promised that they wouldn't sell the Bitcoin. Check the box. Yes, they've also got a program where they're going to discuss thinking about maybe talking about potentially having a committee of thinking. There's a lot of words about we might buy, right? When the government buys, okay, there you've got a story. Until that happens, they're holding on to what they've got. There's no market impact whatsoever. So in many ways, the market already knew that this was going to happen. This is what Trump said he was going to do. If there's one thing you can probably say at the moment, is that Trump says he's going to do something. He seems to be doing it. So we got what we were promised. We actually got more than what we were promised. But I would also just take a step back and go, does the government buying Bitcoin really change anything? In my opinion, no. You know what changes something? The government saying to all those conservative institutions, it's okay to own this thing. Saying to Americans, it's okay to own this thing. That is the most important signal. The fact that Bitcoin has been elevated to the level of gold that may or may not be in Fort Knox, that is the signal, right? So I think that's the important thing that people should take away. Don't get caught up in government buying Bitcoin because the government's never going to step in and start buying, 6 million coins. It's just not going to happen. What I think they are going to do is potentially have, sell the shitcoins, hold the Bitcoin. But I just can't see the average American saying, why are you spending money on buying this internet money when I don't have a job? It's just not it's not a good idea. The government doesn't need to buy it. They have a money printer. They're going to do what they do with the money printer. In my view, the real signal is conservative institutions can now buy Bitcoin and know they're not the number one FUD that they've had for years is they're going to ban it. Well, guess what? They're probably not going to ban it now. So now you can drop that FUD and try and find another one. There's not that many.
Yeah. So do you think that the ETFs and everything along those lines is more important than potentially the SBR or
Absolutely
the government? Why?
Yeah,
Why do you?
and that's the thing. So I mean, if you look at the ETFs, I think the most important thing that people are missing here is that just a sense of scale. So you see a lot of commentary on Twitter where people are like, oh, without the ETFs, Bitcoin would be back at 20K. It's like, well, the ETFs are only 20% of the demand by my estimates. People seem to forget that just because the ETFs have gone live doesn't mean that the spot markets that have existed for 15 years just evaporated and are no longer a factor. They are still 80% of the market. The ETFs are about 20%. If we look at the 13F filings, about 20%, 25% of the ETFs, so 25% of 20%, is these 13F filing institutions. The rest is retail. So 80% of the market is retail. 80% of the ETFs is retail. Makes sense, right? Kind of no change to the status quo. But now let's look at those 13F filings. There's a range of institutions of various sizes, and you have to plot them on log scale. The guys who've got, $100 million, $1 billion, kind of less than $1 billion in AUM, there's a bunch of hedge funds in there. Some of them are 90% exposed to the ETFs. Most of them are 5%. That's kind of typical. They've just got a little bit in their fund. Some are obviously Bitcoin specific hedge funds, but the majority of 5%. But then we go to the other side of the equation. Let's look at the institutions with 10 billion, 100 billion, $1 trillion or plus of AUM. These are the big dogs. These guys have usually 0.01%, but that 0.01% is hundreds of millions of dollars. So for you and I, imagine trying to spend $100 million. You couldn't blow it all if you tried. For these guys, it's 0.01 or 0.001% of their portfolio. They have just been told by the government, hey, you can ratchet that up to 0.02, 0.05, 0.1. Suddenly we're talking about billions and billions and billions of dollars. Yeah, you just can't fathom the size of these numbers. So Bitcoin is simultaneously a big boy. It's going to take a lot more energy to move to higher altitudes. But also we've got pools of capital coming in that you actually can't even believe how big they are. So you kind of got these two forces of interplay, but those things take time. They're not going to wind it up immediately. It just takes time for them to get comfortable with the investment.
Yeah, so with that, right? I mean, we have more money on the sidelines than we've ever seen before, like you're describing. And not only that, right? We have nation states on top of that looking to potentially put Bitcoin on the balance sheet. It seems like to me there's the amount of FOMO money is just insane, and that's going to blow the top off. Now, we've obviously seen like the 4-year cycles and everything like that. I want you to put on your, maybe look into your magic 8 ball here. Like, what are you kind of seeing going forward with this? Or are you just kind of trying to, I guess, tame the expectations here? Because, we, like you said, it does take time to start to, convince these people to put some sort of percentage or allocation towards Bitcoin.
Totally. And I think I would say 95% of the disagreements you see on Twitter is simply a question of time frame, right? Over a long enough time frame, Bitcoin's going to flip gold, right? So that's when people ask, what's my price target? It's 10.8 kilograms of gold per Bitcoin, because that would be parity, right? That's where we start the party. So until we get to 10.8 kilograms of gold, it's going to be a journey, right? Right now, we're like, I think we're maybe not even 1 kilo, something like that. So there's your 10, 11x. So that's the long-term view. In the short term and for the foreseeable future, right, which I would say 2025 is about as far as you can look. And even then, I'm hesitant to look forward more than 6 months because it's chaos. My base case coming into this year is Q1 was going to be very choppy. It's just going to be all over the place. The world's got to adjust to new policies, a new administration. The world is quite clearly changing in a meaningful way. It's going to take time to work that shit out. We're obviously in that phase right now, right? No one's overly surprised. There's going to be capital rotation, probably coming out of the US and moving elsewhere. There's all sorts of stuff going on. It's a rewiring of the way that the world's financial markets work. So that's where we're currently at. That could extend into Q2, right? We could just have a period of just digestion, trying to work out what the hell comes next. I am still constructive on Bitcoin over the medium term, right? So I think that 2025 will end up being a good year. I would think that we actually have a pretty decent shot, 60% odds of getting up above 120 and staying there. I also think that on the downside, that 2024 consolidation range, and this is a strange thing to say, that resembles more of a bear market floor than it does a bull market ceiling. So let's just think about what that means. And I use two personas here. I've got Check the Analyst, who's trying to be very objective, and Check the Hodler, who's there to just stack sats. Check the Hodler, I'm trying to work out what's my downside. If I buy Bitcoin and it goes lower, where do I think we're going to get to? Like, how bad could it get? And my view is that 2024 consolidation range, it feels more like a bear market floor. We proved that Bitcoin was $1 trillion asset. That to me feels like an important level. That's like my downside protection. That's my base case. On the upside, 120K is where every model is going to start getting into heated territory, and 150K, 160K, and these are moving targets, by the way. They move as demand comes in. If we were to get up to those levels, every metric you've ever seen will be lit up like a Christmas tree. So you got to look at that thing and be like, okay, Check the Analyst. His job is not to have emotion. His job is to be the robot and say, what do I objectively see? It would be a crime for me to say that we're probably going to $1 million tomorrow. Like, if we get to 150K, I have to write a piece and go, guys, it's hot as a sauna in here. Make your own decisions, but everything here is, I am not a buyer. Check the Hodler is not a buyer when Check the Analyst is going, holy shit, this thing's hot. That doesn't mean we could teleport to $1 million. It could be the ultimate repricing event, in which case Check the Hodler wins anyway. But I also have to be very objective and say we're probably not going to clear 150, 160 on the first attempt. It will take some time. Eventually we will, because we're going to 10.8 kilos of gold. So unless gold crashes, then we're going to have to keep going higher. But it just takes time. These things don't happen on our timeline. They happen on macro timelines, and it's slower.
The best place to buy Bitcoin in the United States and Canada is the Bitcoin Well. You could go to the bitcoinwell.com/green candle and sign up today, and they will give you wishing well tokens. They are one of the only exchanges in the United States that will give you free sats every time you buy Bitcoin. You have a chance to win 1 million sats every time you buy. You get wishing well tokens. You flip the coin down the wishing well, and you have the chance to win 1 million sats. You heard me here, folks. 1 million sats. And on top of that, they have the absolute best over-the-counter service where you can make purchases over $50,000, and they will walk you through the whole thing. They have the best rates in the United States and in Canada. And on top of that, they have the best white glove service where they will take you through those giant purchases just so you feel comfortable. You'll get it in cold storage, and it's strictly non-custodial. They are saying, we want you to experience the true power of Bitcoin and that self-custody. So go to the well, sign up, bitcoinwell.com/green candle today. Enough for me, back to the show. Yeah, so we're not essentially going to go straight up and to the right. I mean, I think everybody...
we could, but we will come back down. We will come back down the same way.
Okay, so explain that a little bit then. Do you think that, once we go up and to the right, are we going to crash down? Like, how do you foresee this cycle playing out? Are we going to have the BART kind of thing where we see it crash up, fall a little bit, then maybe go back up? Like, what are you kind of thinking that we're in for here? Are we in for a wild ride because of how much money's sitting on the sidelines this time? Or is this going to be similar to a cycle that we've seen in the past?
Yeah, I mean, so far, this cycle is actually very similar to 2016-17, if you can believe it. So, even though Bitcoin's a almost $2 trillion asset, it's moving just like it did back down there at a couple of billion. So that's pretty remarkable, to be honest. I have this saying that I use, which I think is useful. The bull market will author the bear that follows, meaning if we just go parabolic and vertical and we hit $1 million, now I can very easily construct for you a case where we're going to have a nasty parabolic sell-off, and it's going to get us vertical down. Now you've got your 80% correction. The current market structure, we basically go up and we go sideways. We go up and we go sideways. And a bunch of people, something I've noticed on Twitter recently, this cycle in particular, previous cycles during corrections, people talk in percent. We're down 10%, we're down 20%, we're down 30%. This cycle, people are talking in dollars. We're down 30K, we're down 10K in a week. This is an interesting shift, and I've been playing around with why that is. If you've been in this market for some time, you are now a small percentage gain, right? Going from 100K to 150K as a price is a 50% move. Most people have seen a bunch of 50% moves in their life in Bitcoin. But that's $1 trillion. It's a big number to change, even though it's a small percent. So when people look at their portfolio, if you've been in Bitcoin for 5 years, 6 years, 10 years, when the market goes down 10%, your portfolio falls by a year's worth of salary, right? So that's the thing. I think people are becoming desensitized to the percentages, and they're becoming more sensitized to how much my portfolio is swinging around. So that's just an interesting kind of tidbit that I've been pondering or thinking about. In terms of market structure, it's hard for me to construct from 100K or 110, whatever it is. It's hard for me to say we're going down 80% and get back to like what, 22,000? Come on, like good luck with that. It's also very hard for me to construct a case where we go down 60%, which gets us down to 45, which is basically undoing the ETFs. It's hard for me to, and getting below $1 trillion, which is about 52K. It's hard for me to come to that conclusion from a fundamental basis. Bitcoin belongs above $1 trillion. So therefore, if we correct down to like 75 or 70, right, as our low, or 78, maybe the low's in. If we correct down to that level, we're talking about a 30, maybe a 40%. Is that a bear market? It kind of is. Maybe it is. In traditional world, it is a bear market. But obviously in Bitcoin, we move a lot more. So people are going to just like lose track of what is this cycle? And in my opinion, this like stair-stepping price action, and I know people are like, oh, we're down 30K. It's like, guys, it looks like a fucking correction. It looks like any other correction we've seen in any other market. This is a normal Bitcoin day. Like, chill out. So it's one of those really interesting dynamics where people are just becoming desensitized to normal markets. So I'm of the view, if you go back to 2017, Bitcoin was a new thing. No one knows what it is. We're all trying to work out what this strange internet money is. The world responded to Bitcoin, and we got this beautiful parabolic adoption advance. The middle period, 2018 to 2022, was chaos, right? Leverage, shit blowing up left, right, and center, all over the place. Since FTX, the market is different. It is different. And rather than the world responding to Bitcoin, I believe that Bitcoin is now responding to the world. People are now using Bitcoin as a vehicle to express their view on Fed policy, on interest rates, on monetary debasement, on macro, on politics, on war, on all sorts of shit. People are using Bitcoin as a tool because we kind of know what it is. It's not going through that, like, what is this thing phase? So in a way, Bitcoin is now going to be much more tethered to the way that the world works. And the world is also kind of a weird place, in case you haven't noticed. There's shit moving all over the place. There's new policies everywhere. So it's going to move in that kind of environment, but it's going to be a lot more responsive. Some people say, oh, it makes it more correlated. But at the same time, I would rather own Bitcoin than some random stock on the stock market. So in many ways, Bitcoin is my vehicle for expressing my economic views on the world. And now we start to move towards this interesting idea where, what if Bitcoin becomes the index? On a Sunday, something blows up, right? Something happens in the world, some political statement. What is every TradFi guy in the world, even Peter Schiff, what's the chart they're going to post on Twitter? We all know it's the Bitcoin price chart because it tells them what their stock portfolio is going to do Monday morning. So ultimately, Bitcoin is becoming the global index. It's not just an asset, it's the index of the world, which is a fascinating concept. And that's kind of where we're heading. It's kind of interesting.
Well, I mean, do you think that, Trump releasing Truth Social posts on a Sunday night saying like, hey, the crypto strategic reserve is going to contain all of these different coins and it's also going to contain Bitcoin. Like, do you think that was part of this transition over, like somewhat of that significance of, hey, the president of the United States is now recognizing like this is a 24/7, 365 market opposed to the traditional 9 to 5 Monday through Friday market that we see in just traditional equities?
I don't know, that specific event. I was not a fan of, for a couple of reasons, and it's not even because like they tweeted out different tickers in the, it doesn't matter, what was it, ADA, XRP, and Solana.
Yeah, whatever.
The rationale that I kind of came to there, well, I didn't like that event for a couple of reasons, but the most important one, it just looked to me like, who is behind those three coins specifically? A very wealthy dude, a very wealthy dude, and a very wealthy dude. And what are those three wealthy dudes doing? Sitting in crypto summits and moving money around. Like, to me, that felt like, we're going to pump your bag because we got a donor, right? Which, that's what politicians do. But to me, it just looked like the tweets are for sale, right? Someone made a bunch of money from that. And I just, yeah, same as Trump token. I don't know, that whole thing. I just think if that doesn't strike you, if those two things don't strike you as questionable, yeah, I don't know. To me, that was again, I'm looking at this from afar. I'm an Aussie. I have no say in any of this shit, but I'm looking at it from afar and it's going, this feels like fucking straight up corruption to me. That's just what it looks like to me. And I'm a fan of what's going on. So you're like, I just objectively didn't like that event. I don't know if there was any rationale behind it aside from, there's probably some donor money on the table. I wouldn't look too much further into it than that.
All right, yeah. So then now let's dive into the macro. I love talking about the macro. I know a lot of people don't, but I think it's something that is very interesting, especially when it comes to the Bitcoin space. Now, with these tariffs, everybody's kind of trying to equate these short-term price movements with what is going on in Bitcoin. Is that how you see it? Is that the economy, everything's kind of leveling off? Or is it something that, we saw this Trump bump, so to speak, when he got elected, and now this is just kind of a market correction that we should have expected no matter what?
Yeah, there's a few elements to this. So for Bitcoin specifically, sorry, actually, let me flip it around. For the economy more broadly, I do think we're going through a transitional period and a choppy phase. There's a lot of money that seems to be being pulled out of the US. If you look at, I mean, again, I'm not an equity analyst, but it doesn't take a genius to look at the way that the US stock market is priced and be like, seems expensive, right? There's a lot of people far smarter than I, far more qualified than I, who are saying that if the equity market corrected by 50-30%, it would still be overvalued. And who am I to kind of counter that? To me, that feels right. Are we going to see has AI, this whole AI boom, has it really got the return potential? They've spent a shitload of money on capex. They got a bunch of money in it in terms of energy fees and all these things. And then we're already seeing some of those companies, Microsoft and all these entities, are kind of paring back their investment already. So, this kind of looks a bit like the dot-com. People invested a stack of money in hardware and infrastructure and then go, oh yeah, we actually don't have a business case for this yet, right? We actually don't know how to make money from this thing. Or reports start coming back being like, yeah, we're getting a 2% improvement in productivity. AI, and that doesn't mean the internet or AI isn't going to change the world. It probably is. And in the internet case, it definitely has. But is there revenue potential to justify the growth numbers that are baked into these stocks? You've then also got this environment where the US is kind of punching their friends in the face. They're probably soon going to punch their opponents in the face. There's a lot of political tussling going on. And that's just generally speaking going to result in capital going, maybe we'll invest domestically, right? There could even be soft or hard capital controls where, I don't know, maybe Europe says, hey, you actually can't invest outside our jurisdiction because they also want to keep money inbound because they've got their own fiscal problems that they need to deal with. So you have to invest locally, or your pension funds, you can't invest overseas. There's all sorts of stuff that's going to happen. This is very fourth turning-esque. So I think that the US economy has continued to impress, but even it's starting to show some cracks. China's going through all sorts of deflationary busts. I mean, they've got a long kind of recovery process. Europe's in a world of hurt. There's just not that many bright spots in the economy. Australia here, our inflation is out of control. Japan's got the highest inflation in the developed world, and they've got to start raising rates. Their bond yields are ripping through the roof. So there's just a lot of things that are not small that are changing. And if in the institutional investing world, they will sell first and ask questions later. Eventually, they'll ask the question, which is, okay, well, what does this look like at the end of the day? Probably looks like they're going to have to debase the currency, but there's a journey from here to there. Right now, the Fed's still doing quantitative tightening. That's starting to back off, but they're still doing quantitative tightening. They're still pulling liquidity out of the system. And just because they turn QT off doesn't mean they go back to QE. In order to go to QE, you need rates to go to zero, most likely, which means markets are a lot lower. So I think that we're in this environment where people have been expecting the money printed to show up and the Fed put to show up. I think the Fed put is potentially on bonds. I don't think the Fed put is necessarily on equities. So in my view, a lot of people have probably misjudged how much Trump's going to come to the rescue of markets. And once they kind of work that out, they're going to go, well, what do I actually want to own here? So I think we're just going through that period. For Bitcoin specifically, go back to the original part of the question, going down to what I call this air pocket, which is down below 86 and 73, on the way up, basically no coins transacted there. And at the start of the show, I said that markets seek maximum pain. That's a zone where no one knows what the demand is. And here we are backfilling it, trying to work out how much demand the bulls are actually going to put up. I know you bought a bunch at 100K, but are you going to step in and do the same at 85? Right? And that's ultimately what the market's looking for. Prove that we belong higher than this level. You've bought up there, but are you willing to buy down here?
My favorite thing about Bitcoin is meeting Bitcoiners in person. That's why I'm so excited to tell you guys about what is going on June 14th down in beautiful Tampa Bay, Florida. That's the Sound Money Soiree paired with Bitcoin Day. They're bringing a full day of great talks with amazing speakers like your boy here. And we're topping it off with a black tie event just for you and bring in that hot lady friend. We had Bitcoin cross 100K. We're all getting girlfriends, folks. So come on down to beautiful Tampa, Florida. And if you use the link below, you will get 10% off your entire order. Whether you want to go to just the black tie event or black tie event plus Bitcoin Day, you'll get 10% off using the links below. Also, if you're thinking about going to BitBlock Boom in April, if you're going to Vegas in May, or if you're thinking about going to Prague in June, use my promo code GREENCANDLE for all of those. You'll get 10% off your entire order. And come bug me. I hope to see you guys very soon at one of these great in-person events. Enough from me, back to the show.
So do you think that this pocket that we're sitting in, we're gonna kind of, I guess, crab walk along just because of what we're seeing in the macro? We're not seeing a lot of strength, and it seems like Jerome Powell is going to keep those interest rates high, quantitative tightening's high. We're not having this boom market that everybody kind of assumed we would have immediately with Trump. But I think that's because, like you mentioned at the beginning, inflation's not done yet, so we still need to battle that before we start worrying about the stock market and Bitcoin price.
Yeah, exactly. So my base case is that we probably don't escape this thing in the next week, right? I think that we're probably going to chop around down here for a period of time. The first level that you want to be clearing, and I know it's much higher, is about 93. Until we get above 93, which is the short-term cost basis, check the analyst has to be more conservative. It's just simple. Check the hodler. When check the analyst is conservative, check the hodler is patient. Meaning, I'm pretty sure that we're going to get multiple dips and multiple bites at the cherry. I've bought twice now at 78K. I think anything below 80K to me is a value zone. Anything, if it gets down and touches the 70s, I'm a very, very happy camper. I have a lower probability of getting down there, but it is obviously feasible and possible. But once we get up to 93, that's where rallies are going to start to fade. Getting to the 90s, that's where the sellers are going to come back in. So I think until we clear that level, which we will eventually, it's just going to take some time. That's my base case for now. As always, happy to be proven wrong and kind of see how these things play out. But we haven't seen any serious demand show up. The ETFs have just had $4 billion of outflows in the last month. We got a couple of strong inflows recently, but it's tepid relative to what it has been. So we just haven't seen the demand wave kick in yet, which to me tells me we probably have a bit of work to do. And work usually just takes time.
Yeah, I hear you. Now, we heard a lot of the bullish news kind of come out when the quarterly reports were being issued here early this quarter for Q4. So, we heard MicroStrategy, all these other companies now like buying Bitcoin, Cantor Fitzgerald, all of these others really just going all in on Bitcoin. Goldman Sachs, I believe, doubled up their holdings within one quarter. Now, are you fearing that they're kind of taking the foot off the gas because they've seen their short-term gains kind of come in and they're, kind of playing the market here where traditional finance is going to keep, I guess playing the game, so to speak?
Yes, I mean, at the end of the day, the concept of people being like, we were talking before, you got to fight being wrong. Institutional investors have a lot more experience. They're a lot better at fighting that. There's still people who make mistakes. That's how markets work, but they're usually way more patient. Retail is often a lot more flaky because they don't have the time. They've got a job. They do some job, right? They're a doctor or they're a lawyer or whatever it is. They've got a job and then they come home and they trade in their spare time. They're not doing it all day, every day, right? These institutional investors are doing it all day, every day. So they have the time and anyone's going to perfect a skill if you do it all the time. So these institutional investors will wait for opportunities. They will not FOMO buy on the way up, right? So I think there's this kind of narrative that institutions are just going to smash buy and hit market buy. We actually haven't seen serious market buying for this entire cycle. I know that sounds crazy, except for the two spikes into the March peak and then again into the November-December peak this last year. We have not seen net market buying. We have seen net market selling this whole time. So who market sells? People who are panicking, right? Or people who just want to get out. Who is taking the other side of that? Because retail investors usually will just hit the green button. They'll just buy it at whatever the price is. What goes on is institutions wait for the market to come to them. The reason we've been able to absorb such enormous amounts of market buying and only get like a 30% correction twice, right? This is the deepest and longest correction. The yen carry trade on the 5th of August last year, that was 32% and lasted 4 hours, right? That was the deepest correction we've had this cycle, which is insane, right? So really, this is the first serious correction, and that's only if you measure it from the bullshit wick up at 110K. If you measure it from where most of the coins were, it's down like 15%, right? Most of the coins were accumulated at 95. So it's not down as much as what people think, but that market selling, who is on the other side of that? People with patient limit order buys. That's where the institutions sit. Oh, Mr. Panicking Retail, thank you very much. I'll take whatever you want to sell into my bids. So these institutions, they're going to be patient. They're going to wait. They're going to find the right moment. They're going to allow the market to come to them. They're not going to smash buy like retail do. They're a different animal. And I think trying to apply a retail lens to it just gets people confused because we have not seen market buying this cycle pretty much since FTX blew up.
Yeah. So, is there something that could be catastrophic, similar to like an FTX event? I mean, there's but the rumblings of Coinbase. I know we're going a little tinfoil hat here, but Coinbase has custody of 8 of the 11 Bitcoin ETFs. There is, a lot of the issues with the centralization of these ETFs, and that kind of potential. Is there something there that potentially worries you here going forward with this cycle?
Yeah, there's basically 2 things that stand out to me, and you touched on one of them. Coinbase is an interesting one. There's a lot of folks who ironically are like, what if they don't have the coins, right? Price suppression folks. What if they don't have the coins? Guys, that ain't the risk. The risk is that they have all of them. That's the problem. They have so many coins. That's the problem is how many they have, not how few they have. They're not rehypothecating. They've got them all. It's a lot. Now, I would hope that as SARB 121 kind of that's been overturned now, as the banks and the serious capital start coming in, I actually expect that Coinbase will lose business on the custody side because they will rather go to JP Morgan and BNY Mellon, and they'll start to move to their own custodians. I would suspect we could just move the problem from A to B. That's probably what's going to happen. We'll just see coins the same as BlackRock. It seems to be the dominant ETF. Wherever BlackRock goes, that's probably where a lot of other institutions will go. So we could just move the puck from one place to another. But these are all things that we have to see play out. Now, look, there is a risk there. It's hard to quantify. It's the not your keys, not your coins problem. All kind of TBC, but it is a risk just because of the centralization. The other one, and this is more of a soft one, and I don't have a firm conviction on this. I am a little bit worried when we see. I'm not worried about MicroStrategy, the company. I'm worried about the perception from other institutions who look at it and go, there's only one buyer. Now, that is not true, by the way. During the $100,000 range that we're in from like November through to, February or March, in that zone, Michael Saylor or MSTR was as big of a buyer as the ETFs, pretty much 1 for 1. They're about the same size. So that gives you a bit of a perspective of how big they are. And both of those are like 20% of the total demand. So we're talking about there's 40% in ETFs plus MSTR. Perception is reality. And for many investors, what they see on the headline doesn't matter that they're wrong. It doesn't matter that the headline is bullshit. Welcome to the world. People read headlines and they go, oh, that's a scam. People are looking at the headline and going, oh man, that looks like one buyer. I'm not interested. I don't want to touch a market where there's only one guy buying. It doesn't matter that it's not true. And eventually the market will sort that out and those people will be proven wrong. However, if that becomes too much of a perception, if MSTR becomes too much of the only buyer, my fear is that it's actually going to push institutions away until the market goes low enough that it becomes just too attractive of a buyer to happen. So that is something that I'm just conscious of. It's a very soft observation. It's not something that has to happen. It's not saying that MSTR is going to get liquidated. I don't think that's the case. There's a lot of people who say that, it's going to blow up. I don't think it's going to blow up. I think Saylor is smart enough to structure his capital structure that he'll be fine. He's not going to get liquidated. But I do think that perception is reality thing it's just, I don't like it. I would rather if there's like 20 MicroStrategies of a similar size, because now we've got a competition. The problem is we're getting to the point where there can be no competition. There will never be competition to what the company's built, which is good for the business. But also, wouldn't it be great if we had 3 guys, right? A Coinbase and a Fidelity fighting over all these coins. Now we've got some serious momentum. In a way, we kind of didn't get that opportunity to see that. We've just got kind of one giant whale, which, TBC, what they're going to do with all that Bitcoin. They become a bank, maybe. He with the collateral is king, all TBC.
Well, I do have a little wrinkle in there. I do think that there's one man who can dethrone Michael Saylor. And I've said this a couple of times where I think it's Mark Zuckerberg. Now, before you freak out on me, I'll tell you why. It's because Meta has obviously, a bigger market cap and everything like that comparatively to Strategy right now. But Mark Zuckerberg has full voting rights on what Meta does with their balance sheets. So if they wanted to, Mark Zuckerberg, whose goats are named Bitcoin and Maxi, he could do this, and then that could take your I guess, issue there into just strategy to potentially strategy and meta. Now, would that change your perspective a little bit? And do you even think that's possible at this point?
I don't know enough about. It's a very interesting idea. Just the simple fact that he has the voting rights, I think, is interesting. I mean, it's kind of interesting that he has a pair of goats too. That's also pretty cool. Actually, there's a tip. I'll never forget it. Back in my university days, there was a bloke who had a pet goat and he brought it in. The amount of ladies who came up to him wanting to visit the goat, that was a technique that I've not seen, but kudos for that one. So look, I mean, look, that's an interesting theory. It would certainly help. I would like to see some serious money coming in. And if you've got one of these big entities that's willing to fight over it, that's great. Competition is good. Whether it happens or not, that's a whole different animal. That said, Zuck's going through his glow up at the moment, so maybe he's going to get based and work this shit out. So let's see. That's an interesting theory. I'd love to see it happen.
Okay, so you've discovered Bitcoin and are on the path to financial self-sovereignty. But simply holding Bitcoin is not enough. You need to make sure that it's scored properly and you are in 100% control over all your assets. So sharing your keys with third parties and taking on that counterparty risk is not the answer. The answer is pure and simple. It's uncompromising self-custody, and there's no better way to do it than the Bitcoin way. They've got over 25 years of cybersecurity experience, and their team of experts can help you properly self-custody your Bitcoin, secure your digital life, configure your privacy phones, and even establish a Plan B residency if you're looking to do so. So I'm gonna help you guys out here and give you a free consultation if you take the first step and visit thebitcoinway.com/green candle, and you can check out the boys at the Bitcoin Way and see how they can help you become self-sovereign.
Yeah, man, I do agree. It's like kind of that glow up, man. This is maybe the potential final step, right? He's got the hair going, the chain popping, fly, doing the surfing with the American flag and a suit and all that. This would be the final step to make Zuck cool again. So,
oh man, let's do it. I mean, I honestly, with a lot of things in the world at the moment, I'm like, I just want to watch the movie, right? Another one I want to see. I actually want to see. I don't think it will, but I want to see the price go down to 65K. Why? Because that's MSTR's cost basis. And I want to see the headlines. I want to see the doom. I want to see the chaos. I'll be buying it with 2 fists. I'll be selling everything in my house to do so. But I want to see this movie. I want to see the Mark Zuckerberg movie where he goes and buys a bunch of bit. Let's do it. Like, I just want to see these movies play out now.
Yeah, and I mean, honestly, I think like we gotta, we got front row seats, so it's like tune in because it seems like there's so much bullish news coming forward every single day. Now, with that, right, we do have some kind of unique news coming out on ETF products of the shitcoins and kind of that aspect of it. Do you think that that's a negative towards Bitcoin here going forward? Is that something that worries you where it's like, hey, instead of these big money managers saying, hey, we're going to put an allocation to Bitcoin, they're going to do an allocation to Bitcoin and have like a crypto basket?
No, I wrote a piece when the ETFs for Ethereum went live, which I called the flip-floppening. And I use Ethereum as a punching bag, but that's just where I have most of my experience. And you can apply all of those critiques to any other shitcoin. And one of the points I open up saying, like, what do I think these ETFs are going to do? First things first, Ethereum now has to fight on the same playing field as Bitcoin, right? So now Bitcoin doesn't have an upper hand, doesn't have some kind of unfair advantage. And my second point or third point was, I do not believe that the rankings that you see on CoinMarketCap, where Bitcoin is $1.4 trillion, bigger than the second biggest thing, that the Bitcoin that has not been mined yet is the 5th biggest coin. The size of Bitcoin and the divergence between Bitcoin and everything else, all these shitcoins getting an ETF ain't changing that. It's just not happening. It's just not happening. So no, I don't think they're a negative for Bitcoin. I don't think they're really, to be honest, I'd be very surprised if they get any meaningful demand. In terms of the flows into the ETH ETFs, they're not even remotely close to the market cap parity in terms of relative weighting. So I think, I may be incorrect here. I should have looked this up, but I'm pretty sure that BlackRock has not filed for any additional ETFs beyond the Ethereum one, which means that they've kind of worked out this thing ain't, some small ETF provider can go and do that. There ain't enough money in that for us. It's not worth it. So I'm of the view that there's just no demand for this stuff. I really like Alex Thorne's take on shitcoins. I think it's a really concise way to do it. It's the dog chasing the postman's bike or the car, and he finally catches the bike or the car and he goes, oh, I actually don't know what to do with this thing. I'm chasing it, but now I don't know what to do. The crypto world has made a lot of promises. It said a lot of things. It said, we're going to build this, we're going to fix that, we're going to make this better. Now it's time to show those things, right? What have you actually made better? Don't know. I don't want words. I don't want bloody, marketing pitch decks. I want to see a solved problem. And I think the crypto world is scrambling to find that problem. They've got a lot of solutions, but not a great deal of problems that they solve.
Yeah, I mean, I agree with you there. I think that, the crypto world, there's just basically a bunch of big guys who have a lot of money that are basically just tossed it around to, be donors. And that's where they're kind of getting the pat on the back, so to speak, for these ETFs.
Totally.
But I agree. I don't really think that we're going to see too much weight here. But with this cycle kind of going through, you say it kind of reminds you 2016-17 time. Well, what does that mean? Does that mean like we're going to start to see Q3, Q4 kind of start to run up, or we're going to be crab walking for quite a while? Put on your prediction hat here for me, checkmate.
I have no idea, and I'll say that to every time someone asks me to predict the price. I have absolutely no idea, and neither does anybody else. I think that's just a really important thing to accept. When I talk about it being similar to 2016-17, I sadly wasn't there for that market. I bought the top of that cycle. So I actually didn't get to live through that beautiful parabola, although I certainly hope one day I get to. I don't think I will. I think that parabola will never be surpassed. Nevertheless, I think that the reason why it's different, it's similar to 2016-17, very spot driven. The 2018 through to 2022 period was heavily dictated by leverage. Futures came live. I mean, they existed before that, but they reached a significant scale. Stablecoins stepped in as collateral, so people could now bet more on everything without like the coin collateral problem, the convexivity to the downside. We had off-chain leverage, Genesis, Three Arrows, Luna, all this shit that like it was just off-chain, GBTC, BlockFi. We had leverage everywhere. And then we had the GFC, which was 2022, that just wiped it all out. So the 2016-17 cycle, there were no derivatives. There really were no, stablecoins existed, but they were insignificant. Really, it was buy Bitcoin, and Bitcoin was actually the casino chip too. You bought Bitcoin to speculate on Binance or Coinbase or Poloniex or whatever. So Bitcoin was the casino chip. This cycle, real fresh capital has come into Bitcoin itself, spot, but also the ETFs, spot. Derivatives they're growing up, but they're kind of keeping the same. They're relative to Bitcoin's market cap. They're about 5%, options and futures. We're not seeing a buildup of leverage. And I can't see any like Genesis entities, which are doing all this crazy off-chain leverage. We just don't seem to have the same leverage profile that we did in 2022, 2021. So this cycle from a market structure perspective is much more similar to 2016-17. You'll often see those charts where people look like per cycle since the halving. How did they perform? Or I think the halving version of that chart, put it in the bin. It's useless. The cycle low version of that chart is really useful, only on the left-hand side. It takes time for investors to recover from a bear market. And we've gone through a very, very similar recovery process, hit fresh all-time highs to every previous cycle. The right-hand side of the chart, where the cycle goes from there, totally depends. Do we have QT end? Do we go back to QE? Does the world blow up? Does it stay stable? It completely at the whims of how the world wants to move. Bitcoin, in my view, is a solution to a lot of these problems. They're still going to have to debase the currency. So over any meaningful time frame, 10.8 kilos of gold. But in the short term, absolutely anybody's guess. I couldn't pretend to look out more than 6 months.
All right. I tried to get you there and have you do that. Have you give me a little.
More importantly, I bound where I think we're going to go. I would say that the chop consolidation range, let's just say 70K for round numbers, that's probably about as far down as we go. That's my base case, right? Base cases can be broken, but that's my base case. On the upside, if we got to 120 and then 150, we're in the topping cloud. I would be surprised if we kept going. We can, but I'd be surprised, and the odds aren't high that we stay there. So now I've got a zone somewhere between 70 and 150K. That's where I think we're going to be trading for the foreseeable future. That's a 100% move. That's 100%. If you buy at 75 and it goes to 150, you've doubled your money, right? So like, more importantly, you bought Bitcoin and it's one Bitcoin's one Bitcoin. But, however people want to think about it, that's fantastic. People are like, people have become so desensitized. and being like, oh, it's it's only up 40% on the year. It's like, guys, that destroys any other asset. Like, have some perspective here.
Hey, man, I agree with you. I think there is no second best, as Michael Saylor says it. But
Absolutely.
I've had coincidentally a couple Aussies on the show recently, so I've asked them these questions. So now I've got to bring it to you, Checkmate. I got to ask you about the size of the Australian animals that you think you could beat in a fist fight. Okay, so we're gonna go through a few different ones. You're gonna tell me yes or no, so that people get to know the real Checkmate, not just the analyst
I'm
Checkmate or
listening.
the hodler or the hodler Checkmate. We're gonna get to know the actual Checkmate here. All right. So first one on the list. Let's see. Do you think you could beat a koala in a fight?
Yeah, probably. Yeah, I'd probably come out with some nasty scratches and a few infections, but I think I'd win. Yeah.
How many koalas do you think you could beat? Somebody threw out 7. I'm not going to say who, but
it's very specific. I mean, it's hard to tell because like they're not slow like sloths. Like they've still got momentum and stuff, but like they're also. I mean, I'm a tall dude, by the way. I'm like 6'7", almost 2 meters. So like these things are crawling around down by my knees. So I don't know. 7's probably about right because now I can't deal with that many at once. Depends how aggressive they are.
All right. Well, that height definitely changes everything, man. You got the
yeah,
and everything. Okay. So then what about the little wombats?
Oh no, they'll be fine. I mean, they're hardy things. It will take a fair bit to knock them out, but no, I don't think I'd have too much trouble there.
I hear they're pretty dense as well. What about
they are dense.
What about a dingo?
I mean, because they're obviously a pack animal, right? So now we're starting to move into like wolf territory as a relative comparison. And to be honest, I wouldn't want to be taking on more than 2 of those. I think you'd end up in pretty bad shape.
Yeah, I mean, I hear you on that. Okay, so then an emu.
Yeah, interesting because it has a similar problem to me where it's super lanky. So like it does have some weaknesses, right? So get it by the legs, take it out by the neck. There's like a few areas where it's got some weak points. So I probably wouldn't want to take on too many of them because they are big. They are as big as me or bigger. So they're a serious animal.
Yeah, amen to that. Okay, and then the last one. Everybody wants to know, do you think you could beat a kangaroo in a fight?
I reckon a one-on-one with a male kangaroo would be a very difficult fight. I think people misunderstand how jacked these things are. When they stand up, their pecs explode out and they just have this and they just like raw energy. And by the way, they've got 3 legs, right? Their tail, they can stand on it and they're like raptors. Their feet have got these giant talons. Very, very few people, I think, would fare very well in a true one-on-one combat with a kangaroo. You're in trouble.
Yeah, but you're 6'7". You
I know,
think,
but these things.
No?
So imagine all the weight that would be in me, but it's in his kick, right?
Yeah.
These things, when they stand up, they're not short either. So look, I would, if I was taking on 2 of those, I'd be in a world of trouble, I would think.
Well, hey, just one. You think I need to get your final answer. You think you said it would be tough. Do you think you could do it?
I would say it would be a fair fight. I think it would,
there we go.
I'm not going to say that I won't need hospital afterwards, but I'll give it a crack.
Amen. Amen to that. Well, you've been very generous with your time, Checkmate, and thanks for playing along with me at the end. Why don't you tell people where they could find you and what else you got going on?
Good on you, mate. No, you'll find us over at checkonchain.com. We've got a newsletter, which we do twice a week, video and written. And we've got a free charting website, which has got pretty much any Bitcoin chart you could possibly want. And they're charts that I build them for myself, right? So I use my own pasta source and I use them in the newsletter every week.
All right. And I'll put all that in the show notes, and everybody go check out Checkmate on X as well, because you'll see him get into many Twitter arguments, which I love to tune in as well. So thanks for everything you do, man. And thanks for coming on the show.
Good on you, mate. It was a pleasure. Thanks.
Thank you for tuning in to the latest episode of the State of Bitcoin podcast. If you really enjoyed this one, I've got another one cooking up for you. You can click that right here and you can go to the next episode, which is an absolute banger, where I'm bringing you only the latest and greatest guests. Or if you're looking for more macro-related content, you could check out my other channel, Macro Insights Pod. I got it linked for you right here. So where I'm bringing you more about stocks, real estate, traditional finance stuff, So go ahead and check that out. And if you enjoyed this podcast, go ahead and hit that like, hit that subscribe button, and tell a friend to tell a friend. All right, enough from me. I'll see you at the next one.